For small business owners in the Illinois Valley, are you leaving money on the table at tax time? What if you could legally bypass a major federal tax cap using a single Illinois form? Most can, but don't. There's also a federal rule that can slash 20% off your business income, but its complexity stops people. These aren't just for big corporations. Overlooked savings are hiding in your home office, your car, and startup receipts. We're counting down the top 5 categories of overlooked deductions for Illinois Valley businesses that put cash back in your pocket. Let's start where your business did. Did you claim all your initial formation costs correctly? The IRS lets you deduct up to $5,000 in startup costs in your first year, covering market research and initial ads. Your home office is a serious deduction. Write off a portion of your mortgage interest, utilities, and insurance based on its square footage. Driving to a client in Spring Valley, track that mileage. Every mile is a deduction, currently over 65 cents, and it adds up fast. The money paid to your accountant or business lawyer isn't just overhead. Those professional fees are 100% deductible. Taking a client to lunch is still valuable. Business meals are 50% deductible, so long as you document the business purpose. But what about that new truck or equipment? Most think you write it off slowly. What if you could deduct the entire cost this year? This is possible because of Section 179. It's a rule designed to help small businesses invest in their own operations and growth. It allows you to treat the full cost of qualifying equipment as an immediate expense, rather than depreciating it slowly over time. A $50,000 machine doesn't give you a small deduction. It reduces your taxable income by the full $50,000. Investing in equipment is smart, but what about investing in your skills and your people? Any course or seminar that improves your skills in your current business is deductible. Getting better at your job literally lowers your tax bill. The same applies to your employees. Contributions to their health insurance or retirement plans are deductible business expenses. Now let's get hyperlocal. Much of the Illinois Valley is in what's called an enterprise zone with powerful tax breaks. Recall that $5,000 equipment purchase? In an enterprise zone, you don't just get Section 179, you get a state sales tax exemption. It gets better. Build or improve your commercial property in the zone, and you can receive property tax abatements for years to come. And if your business is creating jobs, Illinois offers the EDGE tax credit, directly rewarding you for hiring local talent. Next up is the QBI or Section 199A deduction. It lets many businesses simply not pay tax on up to 20% of their income. So that's a huge federal benefit. But how do you get around that major federal tax cap we mentioned at the beginning? The problem is the federal SALT cap, which limits your individual state and local tax deduction to $10,000 a year. Illinois created a workaround called the Pass-Through Entity or PTE tax. Your S-Corp can elect to pay the state income tax for you. This matters because the tax payment is now a fully deductible business expense on your federal return with no cap. These deductions don't exist in a vacuum. A real tax strategy is about stacking them together for a compounding effect. Think about it. You deduct startup costs, then the accountant's fees, and then use Section 179 on your first equipment purchase. Or use the Illinois PTE election to maximize your federal deduction, then apply the 20% QBI deduction to that already lower income. A manufacturer in an enterprise zone could get a sales tax break on machinery, deduct its full cost, and get a credit for hiring. So what are the key takeaways for your Illinois Valley business from all of this? 1. Master foundational write-offs like your home office. 2. Maximize asset deductions with Section 179. 3. Use federal rules like QBI. 4. Use hyperlocal benefits like enterprise zones. And 5. Use the Illinois PTE tax to bypass the federal SALT cap. The tax code has incentives designed to help businesses like yours grow. Ignoring them is like turning down free capital. You built your business with hard work. Applying that same focus to your tax strategy can fund your next stage of growth. Don't go it alone. Take this knowledge to a tax professional who understands Illinois law and our local incentives. It's a profitable meeting.